Hello traders, Gary Wagner here. Just about 10:45 in Honolulu, 4:45 in New York. It's Monday, first day of May, May 1st, 2017, and this is the Daily Report for Gold and Silver. We do have strong selling pressure in the precious metals complex overall, with gold, silver, platinum, and palladium all trading lower on the day. However, it is silver that has the largest percentage drawdown on the day. We'll look at that in a second, but first to gold. Gold closing off, and this is basis most active June futures at $1257.80. Puts it off about $10.50, or a net drawdown of about 0.8%. Low on the day has been $12.55, actually $54.90, with the high on the day of $12.7240. And as you can easily see, we've closed much closer to the low than the high on the day, really giving up almost a full percentage point. Spot also $12.5687 and change, let's say, down about $11 on the day, draw down about 0.9%. When we look at the highs and lows, low on the day, $54.34, $12.54.34, and $12.71.16. But it is silver that has really given up the most dramatic ground, so to speak, as we see it breaking below $17 now at $16.89, off about 37 cents on the day. A net drawdown of well over 2%, 2.13 as the current tick. Now it's traded to a low of 16.81 and a high of 17.29. So we are, about 8 cents off of the low. But I think the key is the fact that we are seeing a 2% drawdown in silver today. When we look at spot is at 16.87, also down about 31 cents. No doubt an ominous start to the week, watching gold sell off in double digits, down almost $11. We are looking at most active contract of gold futures. This would be the June contract, and we're looking at a standard candlestick chart, and this is a weekly chart. We talked about this a little bit on Friday's show, and that was really the development of a pattern simply called a three-river evening star. Of course, we talked about the criteria for that. It has to be occurring after an uptrend, and we can absolutely say that that criteria was met. It is followed by either a doji or a star simply being a small-bodied candle which gaps above or below the prior candle. Color is really not important. This could have been red or green in terms of the star itself. Umbrella and stars are not color-coded, so to speak. And then the following week, meaning last week, you get a long red line, and the long means you had a sizable range. Red, of course, means that it closed below the open on Monday. And one of the things that we talked about was the fact that we really didn't get a very long red line. In terms of the size here, it is not that long. It's certainly not a small-bodied candle. I would put it in the framework of a medium-bodied candle. And in that case, what we will typically do is look at the range last week and kind of combine it with the range of this week. And if this week continues under pressure, that would give us that three-river evening star. Not necessarily a confirmation, although we are getting this week with a red candle with a lower low and a lower high. It's the size of this candle which causes me to identify the pattern that we're looking at as a three-river evening star variation. Now, I think more importantly than that is the fact that when we look at a critical support level that we have earmarked roughly at 1261, it is based upon the former high that the market reached, end of February, beginning of March. We knew that we had a sizable breakout when it broke above that. Now, that was now going on 3 weeks ago. However, it did stall, and it stalled just shy of $1,300 per ounce at about $12.97. I believe that was a high on this candle. And then, of course, last week we had the market sell off considerably. Now, we've got a couple of events that could certainly rock the market either way. We have the FOMC meeting, the Federal Reserve meeting, which will begin tomorrow, conclude on Wednesday. And it's really the minutes and the synopsis that we will hear on Wednesday that is everything that we want to know. We're really not going to learn anything anything from tomorrow's start of the session. It's not until they release some sort of a statement. And then we have the jobs report coming in on Friday. So the combination of both of those could certainly dynamically influence precious metals pricing, specifically gold. My recommendation is obviously we are going to stay flat. We have no active trades. I want to see where this market settles. And in terms of various support levels that I would look at, 46.36 and the big one at 28. Those are the levels that we want to look at. And then there's one other critical level, but for that we'll need to pull up a daily chart. And the studies that I'm referring to are simple moving average, our 50-day and our 200-day. I've just put up a daily chart. This is in standard bar chart format. And the reason I want to use a bar chart here is we really want to focus on highs and lows in the market. Now, when we look at this, we have our shorter term 50-day, that is this dashed blue line. Our 200-day moving average is the more stable moving average here. We can see where we hit resistance at the 200-day moving average. We can also see the breakout that occurred as the market went above it. And at this point, we are just at the 200-day moving average. So if the market could find some support in this area, it would be a logical place to see it bounce off. We've seen it act as resistance. It could most certainly act as support. And then the key areas are going to be below that. We've got 57, and that's the area we closed at. And then the 1249, that is our 50-day or shorter term moving average, also critically important. Lastly, I do want to take a serious look at silver. Silver had the greatest percentage drawdown today, losing 2.3% on the day, closing well below $17 per ounce at $16.87 and giving up almost 40 cents. Now, unlike gold, which is just holding on to by a hair, but holding on to the 200-day and 50-day moving average, the same cannot be said for silver. Here's our 200-day moving average and our 50-day moving average. And roughly 7 days ago, so not last week, but the week before that, late in the week, we saw silver prices really dramatically plunge below this price point and really never look back. So we're well below this particular price point. In today's trading, we broke below a 50% retracement, which isn't all that important. And that retracement, of course, is looking from a low at 1567 up to these highs here at 1865. But here's what I find interesting. Although we closed at 1687 on the day, the low of the day came in, matched a 61% retracement, pretty much to the dime. You can see how it had a low right in here that also matches these lows that came in, back in March of this year, and that was our sounding board. So if in fact silver could find some support, the 61% retracement of this large move is a very logical place to look for that. However, if the market continues to trade under pressure on a technical basis, the next level has to be our 78% retracement level, and that comes in at roughly 1633. In other markets that we follow, mixed bag in U.S. equities, with the Dow Jones Industrial Average trading nominally higher for the better part of the trading session today, although closing off fractionally. I'm going to give it a check mark in the unchanged category as the Dow closed at 20,913, down 27 points on the day, a drawdown of a little bit over 0.1%. Now, both the Standard & Poor's as well as the NASDAQ did close higher on the day. Of course, it is NASDAQ that is most impressive, but let's call it fractionally unchanged again. When we look at the Standard & Poor's, that's up 4 points, a net change of about 0.2% at 2388.33. But it is the NASDAQ that has garnered so much attention as it moves to yet a new record close, a new all-time high, up almost 44 points, a net gain of about 0.75%. After hitting a high at 6,100 on the NASDAQ index, and it was just last week we crossed the milestone of 6,000. So traders, as far as U.S. equities go today, As I said, a mixed bag. Dow Jones Industrial Average closing slightly, moderately, fractionally lower on the day, 20,913. But the interesting thing is when we look at our daily candles, and that's what I have up here, we can see that although we could be consolidating, we could also be forming some sort of a top in the market. Considering this is our record all-time top, I'm going to try and draw the line as straight as I can. This is our record all-time top up in here. And when we look at the market, we're just shy of that. We are trading, of course, with these slightly lower days, and that tells me that we could, in fact, be looking at some sort of a top activity. However, the same cannot be said for the NASDAQ. The NASDAQ once again closed at a new all-time record high, 60,091.60, up almost 0.75%, a net gain of about 44 points. And even on a weekly chart, we can see this breakout that occurred in the NASDAQ with this tech-heavy index really moving to uncharted territory. And that's after last week's milestone in which it traded and closed above 6,000 on the composite index numbers. Lastly, traders, I do want to take a quick look at the gold-silver ratio. We've been talking about this particular ratio for about a week, maybe 2 weeks, and we pointed out the fact that I really thought we would see a widening in the ratio, meaning it would take more ounces of silver to buy a single ounce of gold. Of course, even as this market came down, we saw gold decline roughly 1%, but silver decline roughly 2%. And the net result of that was a pretty dramatic move in the ratio. And what I mean by that is at the end of last week, this of course is a daily chart, you were able to, for about 73.5, a little bit over that, ounces of silver get an ounce of gold. Now it's going to take you about 74.5 ounces of silver to get that same ounce of gold. You've lost about 1 ounce of silver on the ratio. You can see a pretty tremendous move up, and I believe that there is definitely more room to the upside. Traders, we are sitting flat with no active trades in gold or silver after pulling small profits about a week and a half ago. We are looking at a daily silver chart, and once again it has that 61% retracement that so eloquently lines up to these recent lows that we have seen. And as I said, it's a very logical place to look for some sort of tentative support in silver, some sort of a bounce at least. We can see that right here. So we are going to definitely want to consider a silver as part of our next trade, as well as gold, but we have to have some technical confirmation that we have achieved a bottom and seen some sort of a pivot off that bottom. However, the one thing that we can say is the sell-off today, especially in silver, took us to a price point where it warrants our attention, at least to look at silver as a viable opportunity if in fact we can see some support enter into the market. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.